experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, tonight we're just going to talk about a bit of a pause. We're right before another Trump threat, so we'll talk a little bit about what all this might mean. Let's get into tonight's video. Well, welcome everyone. It is Monday. What a quiet Monday it was. You know, I kept looking around for something to happen and nothing happened. It was pretty low volatility, decent trading, but some of the patterns that came out today were not all that good. So let's just get some of this stuff out real quick here, which is Trump's threatening again Tuesday night, another Tuesday night. Does it mean anything? What are they going, are they going to do anything? What's the effects? It doesn't look like Iran is even have a inkling of a ceasefire. And I've said this before, ceasefires kind of serve as retooling and getting all your ammo back together and then go back at it again. And I don't think anybody trusts anybody, so we're a long ways from this thing actually being done. So not much to say. I mean, I looked at, the news today. It's good economic news, folks. There's nothing going on. We're not looking far enough in a rearview mirror, but, the war's been going on and it doesn't seem to affect anybody. They always say the markets are resilient. This isn't happening here. So I would not want to be in Japan and other places in Asia. And I think that some things are going to get pretty ugly here with the fuel situation. And everybody, I would say, and just kind of back up for a minute, everybody that was around during the pandemic, we learned a lot about the world then when we shut it off and then turned it back on and tried to restart it. And it was kind of a reset. I have a buddy that thinks that if they hadn't shut it down and restarted it and pumped the money in, the whole thing would have collapsed. Maybe so. We'll never know. It's sort of like we'll never know if they didn't bail the banks out back in '08. What the effects of that would have been as well. Maybe it would have been okay, would have reset, would have rebuilt the banking system, would have been better off, most likely, maybe, but would have been a massive depression. So that seems to be, if you think about it, where almost everybody goes immediately into the world. Everything's going to unravel. I see all these people talking on fairly high profile levels, and all they do is say it's going to get really bad. This is going to be the worst. And I don't know what it is. I guess doom porn, it's easier to talk about things getting bad and all these challenges than talking about things getting better. I think at the end of everything that we're going through right now, that everything's going to get retooled. Everything, I've talked about this before, the shipping, just general merchandise movement across the world. Who knows, manufacturing, we were all set here thinking beginning of the year we're going to get all these capital investments and things are going to be wonderful, and me and everyone talking about, AI, and AI is going to kick in, in the third quarter in a big way. Maybe it still will, because nothing seems to be disrupted at this time, at least here in the U.S. But we're going to find out what kind of things happen. Like I said, it's going to be months away. So I have no idea what we're in. I'm not going to talk a lot about the war and what have you. That's it. Yeah. Somebody's being selling puts, I don't know. We get a lot of traction. Something I talked about last week. I said I thought we had one day where we had that big volatility reversal, and the 3-day trade got kicked out. If you missed that trigger to get out, then you'd still be in that original trade. But from a technical standpoint, it was stopped out, and market's still climbing up. We're moving toward the 200. I'll show you here in a few minutes what's going on. I'm going to do the best I can to. I was talking to one of the subscribers and some people this morning. He might be around, but anyway, I was just saying, I need to learn how to talk for 15 minutes. I used to do the 15 minutes on the produced, and I've been telling you folks that a lot of things are going to be changing. So one of the things I think I'm just going to discuss it right at this time, just because it seems to make sense. There's not a lot going on. Then we'll go in and we'll do a couple things here. And some of it's been kind of a soft, quiet launch. I put a big notification out in the Substack last night. We have our Trade IQ product out there, and we've got a fair amount of people coming in and starting to use it, and it's working pretty good. And so I'm happy with the performance. But the Trade IQ is the trade sheets that you had on. I've been testing in Substack for better part of a year. It's been developing. So I finally got the product so you guys and folks, guys and gals can go out there and use this and start to set some trades up. So I'm not sure how I'm getting this out to you yet. I'm working on a good delivery to put this out. I'll probably put it in the description probably tomorrow. But basically, every Friday, 1 p.m., I'm sorry, I shouldn't say that, 4 p.m. Eastern Time, I'm speaking West Coast time, I'm going to keep them tight. I'm not going to go on for hours, but about an hour, I'm going to introduce this new sheets and all that, and it's going to change a lot of things that you folks are doing. This is basically, I'm calling it somewhat virtual Bob, in that I put all of the understanding of when I go through my PPMs and everything every night. All the logic and stuff I have in my head, I programmed into this sheet. And somebody made a comment to me that I thought was interesting, in that they used to look at the Substack sheets, and matter of fact, let me just put this up on the screen so you can see it. These sheets, and would look at them, look at some levels, and do some things. What I'm going to be doing in the weeks to come, and because this is a shift in the channel, and I've been telling you that the shift is coming. So I'm going to teach you guys how to fish, okay, and how to do this and set up. Won't do it this week. The following week. This week's more of an introduction. Following week, I'm going to set up trades. I'm going to show you how to set up an entire trade plan for the week using these sheets. And I used to do these sheets, a sheet every night that I would scribble down on one of those old yellow legal tablets, and I would write down all my resistance numbers. I'd put the market grid numbers. I'd hand write all that stuff, lay it all out, make it nice and neat so I'd have a reference. Now I have the reference, and I'm working on a process that you're going to be able to kind of put together multiple of these sheets and combine them. You'll have to have Claude. Maybe you can use something else, but I'm going to have scripts and all kinds of stuff that are going to start coming out in this environment that's going to help you actually manage and trade the money rather than me talking about next to nothing on these live streams I do. I love hanging out with everybody, but there's such a better purpose in what I'm going to be able to do for you. And I'm still going to do these things. I'll keep them going for right now, but ultimately it's going to change. And I don't know exactly, but everything's moving over. I'm working on a process. I'm starting kind of a new environment that's going to be me around during the day instead of working during the night. 'Cause it took me 3 weeks to. This is the website here, and you can go through. You can learn a lot just off of this page here. I probably have one of the better angle of attack, brief angle of attacks that you could understand my theories that I have, and it's pretty nice. I love this line I put in. Everything you've been taught about technical analysis is why you're losing money. And some folks have figured out some things. It takes a while because I know there's some people on this channel that have been around almost as long as me and people that have traded for 15, 20 years. And we've got some pros that hang around the channel. And so this is going to put everything together in an actual structured environment. And it's not just structured to how Bob wants to do it. It's going to give you a lot of things that are going to actually give you the ability to set up even all your ideas, because the numbers and the market grid is like, it's funny because that came out of an effort. I wasn't even trying to predict anything, but that came out of mid-1996 I used to actually coach and go through major big bond trading rooms and all the major firms. I had 36 major banks as clients that I consulted. And so I built a lot of this stuff around my institutional environment, but now we brought it forward, and I'm telling you, this is going to be an amazing deal. You can build any market you want, any time increment, anything you want. So you can, while you can do all that randomness, I'm going to start focusing how I am suggesting that you put these plans together. So you can go, it's at Advise, ADV, and it's got a big Z, no S. I had somebody trying to get into the website, can't get in there. It's got a Z in it. I knew that was going to be a problem. So I'm going to work on my, on that URL, make sure everybody knows it's got a Z in it. Anyway, I just wanted to tell you about that. We've already had a lot of folks. You can go in there and investigate it. There's all kinds of stuff up here. This is the last I'm going to do, and then the room will be full, and we're going to go right to analysis. But all of the stuff that's on here, I mean, there's I did something that is a game changer here. I was having trouble setting. You have to have the WaveTech indicators to be able to do this. So I put a little button. You push the button, it opens up my page and puts all the indicators exactly. You can go in, there's some instructions there. You can save it, put it right in. So whenever you need to make those, it's the same screen that you'll see when I do my analysis in a minute. So a nice thing is TradingView allows us to click that link, and then there's you bring it up. As long as you have the indicators, it's going to light up. Otherwise, it won't be blank. And then it'll come up, and you can save it as your name in your saved, and you'll always have it right there, and you just click on that and do it. And in fact, we'll go to the data, and I'll run a sheet tonight as we go. But this is important. It is a product. There is a membership. It's $197 a year, full disclosure, and then you pay for what you need. I joke it's liberty. If you need the sheets, you can just run them. They're $1.25 a piece. I tell everybody it costs money to run the AI and all the electricity and everything that makes this thing run. So it's I tried to keep it down to something very reasonable so you could spend, and once you set up your week, if you're kind of trading a market, then you can do it. It's somewhat addictive because there's some of this stuff you could do a whole portfolio, a lot of stuff. But that's what I'm going to do on Friday. Okay, so but yeah, so you'll be able to get right there. See, I can right here. There's a button here. I click the button, and it brings up my trading. Everything's right there. Every indicator, everything. So those of you, we did a meeting last Friday. Those of you who struggled, I got that fixed. So, all right. So let's go ahead and let's go to the. I think here we go. Let's go ahead and go right to the data. Let's get into this. So, but yeah, I hope you check that out. And yeah, and also the first 300 people, and it's filling, are going to be, founding members. There's going to be benefits, as they say, but it's also a lower price. So, all right, done. This is probably the most significant thing I did, because I actually did, with Claude Code, this 73-year-old man wrote a 9,000 line program. This is not a joke program. It's not just a couple little displays. It's running AI. It's doing a lot of stuff. Okay, so let's go ahead and take a look here. So on the data, I want to kind of jump in here. It was interesting. We got some interesting buying today. We're still improving here. So the guy that's selling puts, just be careful. I think we're going to hit a little bit of we'll talk about it here in a minute. But let's take a look at this. So we've got 24%. What we got here, this is all I wanted to show you here, is this is the weekly. And the weekly is holding above 22. That's a big number, because below 22, we get in full liquidation mode, which would suggest that the market's going to do a whole another rollover. Okay, it's going to roll one more time. Still may, at the moment it's holding, but we're starting to see some things out of the short-term database that's getting more traction. And, maybe we'll get a big bump if there's some kind of ceasefire or truce or whatever you want to call it. But this here is, we didn't get a lot of buys by any means. We got 200? There's 14,000 symbols in this database. So this is a joke. It's not material on that level. So let's go over and let's take a look at the daily, and then we should be able to roll straight away on this. Okay. So now we are all the way up to 37%. We were down to sub 22. We went down to 18, hovered around a little bit. We had crazy volatility, all the whiffers that I've talked about. Maybe we got another whiffer coming tomorrow morning. Who knows, right? It's all full quiet today. So so we're back up to 37%. And look at what we got. 4205, 4,700 buys. That's why this thing jumped like it did. So we got a big bullish ratio. We only had 46 exits and 4,700. So this is a big ratio. And just real quick, because I want to spend a minute on this, because when we get these big tranches like this, I don't know, 30% of these will be failed trades. There's a lot of symbols, but we got a big enough pop in a quiet market. The market was up I'm just looking at the numbers, like point 0.4, point 0.6 today. The Russell up point 0.4. There was no big movement here. And matter of fact, it was literally one of the quietest markets I've seen. And we get this giant tranche of buy orders here. So pay attention. This is, as you know, that people hang around this channel. This is exactly what keeps us kind of ticking here, because these new buys, these aren't stocks that popped over the 200-day moving average or something really low level like that. This is where there's been literally 600 there's over 10 million calculations done on this database every night. You know, there's not a bunch of trend lines and, you know, something popped over the 200-day moving average. No, there's structure in these symbols enough that they are entering into what is a trend phase. But what it does is all of a sudden the bottoming, the structure. So we've spent, since all of this happened, 2.5 weeks maybe consolidating this. So there's some basis there. I always preach about the structure of the markets, and there's structure coming back in the market on the short term. We're long ways away on the intermediate. Like I said, it's 24. We had a couple hundred buys, and that's for the week. Okay, nothing else is coming out of that database after today. So once we get this type of scenario, and you get this big giant tranche, it takes days and weeks to consolidate, to sort out which trades are going to get real traction versus the ones. But we'll see how it plays out here. You'll see when we look at some of the numbers here. We still have, of course, energy still long. That trade's been there for 87 days, and this is a daily chart. Normally, this only holds 50 days, 49. So we've almost doubled the holding, and it makes sense. You got crude oil at, 110 plus. You're gonna have strong energy stocks there. So some of these new guys that come in, we've got consumer cyclical. Matter of fact, all of these are 2 to 7 days. Transportation, 7 days. Technology, 2. So all of these are really brand new trades from a sector level. So we have our own custom sector configurations inside this software. This is not S&P S&P sectors. This is internal stuff. We built this construction in 1986, and then in 89 we brought it to the not to the public, but to the institutions in 1989. And in 1 year we had over $1 billion in this model. So it grew quite fast. It got up to hundreds of billions of dollars in here. So the point is, this is pretty solid. Okay, so that's important to understand. Let's go ahead, and I think what I'll do, I'm going to bring up. This is the daily S&P, so we'll get into this. But this is what I want to show you. Look at the PPM structure is staying long. Let me go in here. It is at all the way into about the middle of April. Tax times, actually. It's funny because that usually seems to be interesting time. People are writing checks at that time of the year. How fun it is. So but you can see this has been a nice steady decline. We're now starting to get structure here. We got the short-term database starting to pick in. So I don't think we're going to take off, but if we just look, this is a daily forecast. So all of these dotted lines are machine learning that is predicting based off of what's going on with the PPMs and then extrapolating out into the moving average structure. Can't talk, sorry. But all of these moving averages are trending down yet, so there's still resistance. It's not a moonshot or anything like that, but it is starting to set up some pretty decent configuration here. So getting too bearish here would be probably not a wise idea. But yeah, and I correct myself. The guy who said he was selling puts is actually a good idea. I apologize. But you know what we're looking at here is there's a very interesting thing. I ran across. I'm going to tell you a quick story, but it's relevant. I ran across an old video of a guy named Sperandio, Vic Sperandio, Trader Vic. He was famous in New York a long time ago and moved to Dallas a very long time ago. He's a pretty good trader, but it was like 8-9 years ago, and he was talking about some guys. I've got to look them up. I'll get the name. I'll tell you, because I've never heard of these guys, and I've been around all these years. Everybody's heard Edwards McGee and all the technical guys and Elliott, and you can go on and on. These guys I never heard of, but they did something simple, and it was the same thing that has been done before. 200-day moving average. If you bought when it went above the 200-day and then sold it when you went back under it, you made 18% on average over many, many decades, actually. And so it was kind of interesting. But he said something, and it basically was the angle of attack. So when we look at this 200-day moving average, it's still positive. It's still sloping up. So if you sell a moving average that's still rising, the markets tend not, these are words I've used over the years. These are words that I've always said is the moving average acts as a magnet, so it'll suck it back up above. So that 200 slope, it's still sloping. It's higher going way back and going into June. And so market's probably going to rally back. It's the same thing Bitcoin has done. And what we're seeing is ultimately will challenge all of the moving averages. As always, when I do these live streams, I'm utilizing what I do here is we're going to look at the NASDAQ because it's almost identical, a little bit higher volatility or beta usually, but normally what you're going to get here is the same kind of configuration. So we have plenty of resistance ahead. I had talked about, I'm trying to remember last week that we have the chance at about a 6,800 hit on the S&P. Well, that moving average on the 40 is continuing to drive down. So it's probably 47.50, maybe a spike, but somewhere in there, and I would say somewhere in the next 2 to 4 sessions, we're probably going to hit a pretty heavy a rejection off of those numbers there. So we're going to have a lot of resistance up there. So, but that pattern is played out pretty good. And people like to use the declining markets and higher gases and all that stuff in the political world to this thing's all over and this is how it's going to go now. I don't think that's the case. Not here. You know, as an American sitting here, I don't see and I've been saying this all along, I don't see the end of, where we're going to get a big collapse. Anything can change. We have a war going on. Something unusual happens, then you might find yourself a little bit different. So, okay. So that's pretty much the setup for the markets. Let's put the, before I do, let's do this real quick. I I've got daily up here. Yeah, so I'm gonna run this sheet, and it only takes 40 seconds for it to run, and you can see. But you just have to come up over here into the data window. You have to have all the indicators. I already gave you a button. You push it and save it. It's done. So let's come over here, and I'm just doing Control A, Control C, and that copies that column. All I have to do is come over here, and I just have to drop that data in here, hit validate, make sure all the data is there. So I'm going to run the data. You'll see it's 40 seconds, probably maybe even less. It's incredibly fast. When you use AI through an API where basically you have a direct pipe to push in, you can do it. And you can run 10 of these at a time. So you can really crank. I think it takes 10, it's about 6 minutes. At 5, it's probably 4 or less to get it. And it tells you what it's doing. It's building trade IQ analysis. Then there you go. It's done. So this is for today. And so it does develop a pretty robust commentary. So to me, unless you want to read some of the stuff I put together, I mean, this is better than, I mean, this is as good as anything I do because it's virtual Bob. So when we look at this, it's telling us, so it's got a mixed momentum. So right where we're seeing the PPMs turn down, it knows every rule on every PPM and everything that I think in the analysis from a math viewpoint. Okay, you have to understand, I'm a math trader. I'm not, I have intuition, pretty good intuition for day trading, but this is the math. So it's going to tell us everything here. So it's warning us again. It's got a neutral with bearish momentum, and that's what I'm seeing on the PPMs. They're trying to top out for a couple of days, but it looks like it will extend. So what's the trading opportunity? Close above 66.36, which it is doing right now. It's looking for target 1, 66.65, 66.91. So that's a trade. If I wasn't on here right now, I would throw that trade on. But so it's got some bearish undertones, but if you go through this thing, it's got a lot. I was working with a program. It was actually telling me that it could actually read this thing if I wanted to right out of this app. I don't know if I'm going to do that, but anyway, so that's what's going on. Let's go back to the let's go back to NASDAQ here. And I did notice something. I did not mean that. This will be just a quick update because I realized I had the cash on, but this is a day of stalling, and then we got a potential spike, and then we're back into the pattern, and that's what this thing is telling me. So that was actually ran on the cash. So let's go ahead and just take a quick look at NQ, and we'll get through this pretty quick. So everything has this little hump here. By the way, for those of you that have the indicators, when you see this kind of bump here, like this, they typically are muted so this is for not Tuesday, but Wednesday. I think the FOMC minutes come out, but there looks like a little bump coming, but we see on the longer term, I'm not going to get too educational here, but on longer term aspects, like the white is the 10, 21, 40 period moving average, you're going to see the noise will get wiped out or muted from it on a longer term basis, right? So like if you go just to a 21 or 40, all of a sudden you don't see that same spike you see in the 10. The 10 has noise, and usually when we get to that next day, Wednesday, even that thing goes away, that little spike up, or it just starts to roll down. It typically will spike up too high, and unless they get a ceasefire in the next 24 hours, then maybe that's what's going to happen. So anyway, so let's go ahead and let's go to the. I want to just take a quick glance at the 10-year. 10-year trying to buy it. So it's going to hang right along this 21 period moving average, and those values are around 325. So there's going to be support on from resistance if you're trading a bond, but there'll be support here at 325, and we're probably going to set up a range and continue to kind of stay higher, because I don't think the bonds are going to do much as long as crude oil is staying up. You know, I'm just going to go to crude here because it makes more sense, because these are very related. Something I told you, this red dot that's here, let me move that around. You can see it. This little red dot right here, I told you that was 112. That was, if that didn't hold and we got above that, then we're going to continue to go on. I want you to, if you think about whatever equity are trading off of right now with the war, if we look at crude oil, this is potentially kind of a fifth wave move, but look at this elongated. I'm just gonna, it's showing higher prices into a moving average at 125, where we could actually see the actual crude printing 150. So doesn't appear to be, let's take a look here. The PPMs are starting to stall off, but all this is telling us here is that we'll stay above the 10. So I'm going to give you a new price range here of 105 to about as high as 120, 125. This is going to be the range within these market grid, and that's one of the most powerful things that I've ever come up with. These were early 1992 when I came up with the market grid, but we only get outside that market grid by about 12%. So if you're catching the high, unless there's some crazy news out, I know a lot of folks on Discord, all of us that have been around, people hanging around me for the last several years, is you look for that RTX or STX buy. So when it gets at the extreme of the range early in the day, and that's where the data sheets are going to tell you exactly what you need to do, because on those data sheet, every price target is a probability of what it's likely to do to get to it, and that also means it usually will not exceed that. Like if it's an 80% probability, if you're a day trader or you're looking to sell something that you own, you want to hit those numbers that day. If you've decided, as a matter of fact, this is what it was built for. If you decided today was a day you wanted to buy or sell, you use that market grid to position yourself to get out of that position, or in some cases to get in it. But that's why those numbers are so important. But this right here, this looks like, we're talking May, June. This, we could still be, the oil's not going down. I know people think it's going to go down. It's probably going, if there is a ceasefire, is it going to react? Absolutely. It's going to be a whiffer. Okay, it's going to trade down into some key support levels, and you're going to get stabilization. But I think the lowest we see for a while might be 95 on crude. All right, so let's move on. Let's go to metals. Yeah, so gold's had this new Fibonacci targets. I'm giving you rough numbers. 5,100. We'll give you the first two. Around 50, right around 5,500. But right now we're setting up a potential right shoulder. For old school guys, it would be something like a 1-2 in Elliott, or an AB with a C rally coming. Or, it could be the old classic cup and handle, right? So you come back, you retrace. We got a nice upsloping 10. Everything's in place to get sandwiched between the 10 here, which would be 481 to up to this 40 is going to be at 49.19. So we're looking at, right at maybe as low as 46.10, something like that. We should stay locked in there. The PPMs on PPM 1 is getting a little overdone, so we probably get some consolidation here. Like I said, we're in this mode where we could talk about everything, and tomorrow everything can change, or it may nothing will happen again. Silver a little tighter, got a little more strength in silver. The key number, if you're a silver trader, the number you're going to want to watch is 79.80. We get above that, then you get a move to retest that previous high after the kind of big collapse consolidation, and that would put us up there around 92, 94. Could be pretty decent. It looks like everything is got enough strength to at least try to get above that 40. We get above the 40 and on a closing basis, and you're probably going to be in pretty good shape there. I don't want that. I would just use this one. So this is the other thing that's been happening for the last several days, since this trades every day, as we got new fib targets. 74, it's tightened up a little bit, 74, 77, and then 80. That's probably where we have a shot here, but the only problem with this, we're seeing now that it's starting to trend a little bit. And that's going to be, that's a little bit of a problem. But right now we have the fib targets. If we break through first and second derivative here, then we might see a little more prices. I still think the 60,000 is going to hold here. If it breaks that out, then it would probably look at somewhere between 52 and 48,000. I don't think that's the case. I think when we go over to the weekly, just for a second, you'll see a bit better. This is that what I was talking about earlier, the upward slope on the 200. That slope is going to keep us in place. I see the the weekly is showing it's crashing through. We'll see what happens. It looks like to me that we're going to stay above this for a while. So I don't think it's too early to make that call. We do have Fibonacci targets on the downside on the weekly though, which is scary. Is one is 51, the next level 33, and then 22. So that would shake up the world. I finally saw Saylor like came up out of his hole, and he bought another 6,700 Bitcoin. So at least he's true to his story. He's going down, or he's going to be the most famous guy in the world. So okay, let's been kind of quiet tonight. Let me come back up, take a look at some of these. Yeah, so Sam's saying, I guess oil prices don't matter anymore. Reason why is everybody believes it's going to just come back down. And it will come back. It will be a reaction at some point. And then everybody's going to wake up and realize how disrupted everything is. And then it's going to hover back up. So we're definitely going to see a bunch of stuff. Yeah, if you got errors on that sheet, Smith, go back in there, make sure you have the right setup. So yeah, that's what I would do. Go on that, click that button, make sure you have that. Try that new sheet. You can save it, but the only way you're going to get those errors. Oh, okay. Oh, okay. I didn't try reading your whole message. Okay, yeah, it will tell you if there's any issues with missing stuff. Yeah, if you turned off the WTIRs, the best thing to do, I think, for folks that are using Trade IQ is just have one chart that's all you do is grab the data. I'm still working on a way that I can just grab the data, but you still have to have it's interesting because TradingView is such a huge, big platform. It's got all the data from everywhere on the planet. So, you can run it on obscure things. So try that. I think it sounds like maybe you got that fixed. Let me see here. I'm trying to understand your question, Jay. Sir, may I ask which wizardry paints forward on your TradingView charts? Yeah, those are the WaveTech indicators. There's algos in there that are doing predictive math for how they're likely to go. We've been using them for a couple of years. I told some folks about that the other night. Yeah, okay, Smith. Sorry, I didn't read your whole message. So, but yeah, so that makes sense. But anyway, back to let's see here. Yeah, yeah. So Floyd is saying hopefully it's wave 5. Well, you never know if wave 5 is just wave 5. It can be an extended wave 5. Who knows what could happen. But oil, I assume you're talking about oil. So anyway, but yeah, we should be able to maybe figure out some point months down the road when all of this stuff is stabilized, because we're still in that whiffer mode, which is, you get the headline, the market reacts up or down, doesn't matter which way. You get illiquid, and then you get that big bubble around the market grid. Then you consolidate, and then you wait for the next. Wait for the next headline and another volatility. So let's see here. How did I do? 50. Yeah, Floyd, I'd have to see the exact what you're looking at. Alrighty. Okay, folks. It's pretty quiet tonight, but that's okay. I am excited about Friday, so make sure I'll probably put it out. I'll do my best to get everything straightened out tomorrow, which would put us. So I think I'm going to have to put like a Zoom meeting that you sign up for, that you have to sign in. There's a way to do that. I don't want to throw a willy-nilly open Zoom out in the world, and God knows what would come in, especially if I put it out on a social media. So yeah. Anyway, just mark your calendar. It's going to be tight. I've got one of the guys that's going to put a hook on me if I try to talk too long. Then that will be it. Let me look one thing here. Yeah, it's talking about the ER ratio on the SPY. Yeah, it's terrible. I would not use those models for the SPY. We have used them on a weekly basis. Short term, forget it. It's too noisy. And there's something else that goes on. I cannot trade SPY. If I went in to trade, I can trade S&P futures all day long, 4 months, but I can't trade SPY. The way that the cash flows and things that happen within there is weird. There's way too many arbitragers and ETF guys. I don't know what that is. It's ugly. Some people can trade it, not me. I have no idea what those people are doing in there. So the futures are clean for me, and I've also been doing it for, oh my gosh, 30 some plus years. So, but yeah, I think that so like, let's see, I think somebody was talking about Tesla and Morgan, throw them in the sheets. Yeah, I'd have to bring up all that. Yeah, so I just want to go back to that ER number. Some of those cash indexes, they're not traders. I know people use them. A lot of people trade them. I just don't do well at them. I'm not saying you can't trade them. I'm saying I don't trade well at them. Sometimes you do things, and every time I've went in there over the years, it's like, how do these people do it? Like I said, there's really strange movements, and I'm especially intraday, I'm a scalper, and it just, it doesn't work for me. I guess I made that point. But it doesn't model well, especially on a short-term basis, just the way because I don't have an answer. You might be able to go in there, by the way, and put it in, use SPX cash and use it as a proxy to trade the SPY. But I don't know, on a daily, I'm assuming that you're talking daily, it's pretty noisy. So that's about it. All right, you guys always do this to me, throw a bunch of... Yeah, 100 would be minimum. Just kind of keep that thread going for a second here. It's above 100. It's just not great. You're on a weekly basis, yes. I mean, we've used that on gazillions of dollars and using on a weekly. So there's much better trading instruments, in my opinion, out there than things. And I know SPY, it's big, but like I said, every portfolio manager, arbitrager, market maker, everybody in the world is in that thing. And there's all kinds of cross currents in the flow. So yeah, daily's noisy. Other good thing at some stage, there's some things coming into. So just in closing, folks, just in closing here, the thing about using these sheets, you're going to be able to kind of dig through some of this noise too, especially on individual stocks. That's going to be the place you want to go. All right, folks, I think we're it. Appreciate it. Got about an hour in. So we'll see you tomorrow. I'll start coming with some details and then working on getting, over the next couple of weeks, we'll get this Friday thing going. So, and like I said, there'll even be something in the description of the videos, or there'll be something that gets posted somewhere. And maybe just on Trade IQ is what you may have to go to, and we'll put sign up for a meeting or something like that. And I think I've got the ability to do 300. I don't know how many we're going to get. I don't suspect a lot will be there at the moment. So, all right, folks. I love all your comments, and thanks a lot. We'll talk to you tomorrow, same time. Maybe it'll be pre-launch time, so to speak. All right, folks, have a great evening.